As a growing number of investment banks and company chiefs warn that the likelihood of a recession is increasing, analysts at Morgan Stanley are telling clients that the stock market, despite reeling from a steep sell-off in recent weeks, has plenty of room to fall before hitting levels consistent with. Morgan Stanley's not alone in raising recession odds this week. In a note to clients Monday, Goldman Sachs chief economist, Hatzius, said the firm now sees recession risk as higher and more front-loaded, given the Fed's more aggressive rate hike, putting the odds of a recession over the next 2 years at 48%, up from 35% previously. The investment bank estimates tighter financial conditions could drag down GDP as much as 2 percentage points over the next year. Restaurants are most at risk of a pullback in spending, according to a Morgan Stanley survey of some 2,000 consumers. Roughly 75% of respondents said they'll cut back on dining out over the next 6 months, while 60% said they do so on deliveries and takeout from restaurants. Though driving much of the inflationary gains, essential items like gas and groceries should see more resilient spending, with roughly 40% of consumers saying they'd cut back on either. Major stock indexes plunged into bear market territory last week ahead of the Fed's largest interest rate hike in 28 years, and the gloomy sentiment has ushered in waves of layoffs among recently booming technology and real estate companies. We don't believe the Fed can stop the issues that are causing inflation on the supply side without absolutely wrecking the economy, but at this point, it looks like they are resigned to the fact that it must be done, says Brett Ewing, chief market strategist of First Franklin Financial Services. Goldman Sachs has warned clients it expects another 75 basis point hike in July. Elon Musk says U.S. recession is inevitable, more likely in the near term. Forbes and other major international bank forecasts recession in the U.S. Forbes' worst fears confirmed as Fed plays dangerous game with inflation and rate hikes. Forbes.